Well, greetings to all my investment clients. My name is Walter Meziers, your wealth manager, CPA, tax advisor. Recording this on May 8th, Saturday evening. First of all, apologies. I missed, I believe, 5 or 6 weekly stock market recaps. Caught some kind of respiratory virus that pretty much kept me not being able to record videos, just constant cough. So again, apologies. I still have this nagging cough, not quite gone. So if I cough during the video, again, apologies for that. As usual, important disclosure, this video is strictly for educational purposes only. At your leisure, stop the video. We can read all the details about Trinity Wealth Solutions and the purpose of this video. Again, the video is not investment advice, is not intended as an investment advice or a solicitation to buy or sell any securities. So now that we got that out of the way, just two very important announcements I want to make. The first one, I'm super excited to announce that I have brought in Nicholas Daniels as an addition to Trinity Wealth Solutions as a registered investment advisor representative. A little bit about Nick. He is an estate planning attorney, many years of experience in estate planning. So he is a great addition. I've been looking for over 4 or 5 years the ideal person to come in and be involved in my investment advisory business. He brings tons of knowledge as an estate planning attorney, and he is fully licensed now. He passed his Series 65 exam to fully give investment advice, and he will be assisting me with my clients, and we will be growing our firm even larger. And really, this is about better service capabilities to offer to our existing clients. So kind of 3 pillars of our firm: the investment side, which is kind of maybe my left brain, and then the tax side as a CPA, the right side. So those 2 pillars plus the third pillar, which is estate planning. We have all this in-house. That makes us very unique. So again, Nick, welcome aboard. Looking forward to working with you and providing amazing service to our clients. Second announcement is I'm renaming the Tax Investment Cafe. I'm calling it University, Tax and Investment Cafe University. Why University? Because most of my videos are educational, even with the stock market recap, but there'll be another video hopefully every week talking about different subject matters. Wide range, creation of money, how banks work, how economies work. But the key one is really I encourage my clients to let me know which topics are of interest to you. And I will put that in the video, your interest. Maybe there's some specific thing that's going on in your life, whether it's college planning for grandkids, just tons of things that I will be recording. The beauty of that is it'll be on video and you can watch it at your leisure. I have a YouTube channel, and you can go there and watch every video that I've recorded. So happy to announce really 2 big announcements. The big one is addition of Nick Daniels as an investment advisory representative, and then also more videos, educational videos through Tax and Investment Cafe University. So let's get into the weekly stock market recap, market outlook. I'm not going to go through all the detail here because we'd be here forever on the video. I want to make this as quick as possible so I don't bore you. You can always stop the video. If you see something of interest, you want to read more, please do so. But big picture, markets are going up. We're hitting all-time highs. Pretty much every index is in the green this week. Was very good. S&P, NASDAQ, Dow Jones. The only thing that's down is oil, which is a good thing. And then VIX Fear Index has come down quite a bit. One of the all-time highs, cause for celebration or caution, and history does repeat itself. I'm not going to go in through great detail what the financial media was saying in 07, 09, before the stock market crash. Everybody was hyper, super pumped that the economy can do no wrong. The stock market is just going to continue to grow forever without any major correction. Well, as we know, history is quite different than what the financial media was painting literally maybe a couple months before the major great correction or great recession, as some media calls it. So I'm not going to go through the headlines. They were all positive. Again, beneath the surface, or when you start peeling the onion, it kind of tells a little different story. So again, if you want to stop the video and read the major headlines, and it's pretty similar to what we're seeing. Excuse me, got a little cough in my throat. Very similar to what we're seeing right now. Financial media is just super pumped, all positive, and that makes me worry. So flashback, again, I'm not going to read this for time's sakes, but the point I'm trying to make is the media, the headlines, the Federal Reserve, everybody was saying, don't worry, everything's great. Sorry, I had to pause the recording. So anyway, the headlines were, don't worry, everything's great, super great. Nothing to see here. It's just going to continue going up. And as we know, history shows us what really happened before, the crash of 2007, the Great Depression, as the media calls it. So be careful what the media or anybody else is saying. This is a timeline. Again, I am 07, 09 crash timeline, early warnings, and kind of the canary in the coal mine. Are we seeing the same playbook today? I don't know, but history tends to repeat itself. So what was said before in 07 and kind of similar what is being said now, very similar. So you draw your own conclusion, whether this can just continue this pace as far as the stock market and the economy. At some point, we have to face reality and most likely probability of a correction. Risk, the financial media is kind of underplaying. The big one is private credit. This is kind of what we call shadow banking, off the books. Banks that are regulated have what we call balance sheet capacity, and they're at that capacity. They don't want to take any more risks. So they found a clever way of shadow banking, and they fund those shadows banks, which are really lenders and higher risk lending. But there's 1.5 trillion of shadow risk out there, maybe even greater. Nobody knows exactly the number. Some are saying maybe. So is this the canary in the coal mine? So there's tons of commercial real estate, potential deficit spending, real estate consumer affordability. I mean, every asset class is near bubble territory. These are not good sign. There's euphoria right now that nothing can go wrong, but when that happens, please be careful. Private credit, is this the canary in the coal mine? And I kind of knew what the terminology means, canary in the coal mine. But let me give you a little history and how this term really came about. Coal miners once carried live canaries underground. Birds are far more sensitive to toxic gases than humans. If the canary collapsed, miners evacuated immediately. The bird's death was the early warning before humans felt the danger. Today, The phrase means a small, sensitive indicator that signals hidden danger before the larger system shows stress. So, is private credit that canary in the coal mine? Potentially, and we're starting to see cracks. If you follow that sector, it's becoming worrisome. What's really happening with loans, and there's write-offs of loans, and those are not. It could snowball into a domino effect and create that, canary in the coal mine. The other big one, national debt crisis. Where we stand today, we're at $39 trillion of gross national debt. And we're growing. We're adding, the annual interest payments are $1 trillion per year just to service that debt. And then the annual deficit spending is about $1.9 trillion, some say $2 trillion, and it keeps growing. So it means if deficit spending is going to be at this pace that we're seeing, means every year we're adding additional $2 trillion in debt. And I'm going to have a separate video talking about, what that really means. Just be mindful, is the national debt is growing and growing. That could be the next canary in the coal mine. So projections, today we're at $39 trillion, 2028, if this trend continues, because both Republicans, Democrats don't want to touch this. They're not even talking about this. Because now the hot potato is the war in Iran. Iran. 2030, if at the pace that we're going, it's going to be around 50 trillion. 2033, 56 trillion. 2035, 60 trillion. So debt is not good if we're constantly borrowing to pay for deficit spending, and that's how debt creates. Think of a household. If you're making $200,000 but you're spending $300,000, you got to borrow the $100,000 from somewhere. At some point, individuals, the banks are going to shut you off. Say no more. We can't, because you won't be able to pay off the debt. Government has the magical, call it credit card, unlimited printing. They can print money forever, but there's a limit, because it'll cause tremendous inflation at some point. So what to watch in the weeks ahead, again, at your leisure. Just the big one is going to be CPI report, inflation. Kevin Warsh, the new Fed chair, his first statement, that should, depending on what he says, could drive markets either up or down. So lots of things to watch. Again, I'm not going to go through every item here for time's sake. My perspective is, are we headed for another 2007, 2009? I don't know. But all I can tell you, the probability, the higher the market goes, the greater the probability of a pullback. Is it going to be 10, 20, 30, 40, 50%? Is it going to be 07, 09 repeat? I don't know. But you have to be prepared. You just can't assume this stock market is just going to continue to grow and grow. So don't forget to listen to my Tax and Investment Cafe University. Again, Tax and Investment Cafe University. Every Saturday, 8 o'clock in English. And I talk about different type of tax planning, maybe a little bit about the stock market, more tax planning, estate planning, just general big picture economic information. You can listen on the radio, but you can also listen online. If you go to my website, www.trinitywealth.net, there's a button you can push to listen to our radio show online. And I just want to leave you one other visual here that's pretty powerful. Sorry, I had to pause the visual, but visuals are very, very powerful. A picture paints 1,000 words, as the saying goes. So This is a chart of the S&P 500, which is kind of the broad market. And if we pull it back, this is 2000, 2002, over 50% correction. So what did we see? Everything was just going up, up, up. This was the tech bubble. Everybody was just raving. This has never stopped, and unfortunately, the music stopped, musical chairs, and boom, we had a correction. And then we had the recovery. Same thing, it just kept going up with some pullback. And again, we hit all-time highs. And guess what happened? We had the Great Depression. Where are we at right now? Visually, you tell me. Now this is COVID, so there was a pullback and pretty quick recovery. Some pullbacks, and now the attitude is buy the dip. Well, at some point, this dip is going to turn to this, a 40-50 probability. I'm not predicting, but history does repeat itself. So I think a lot of investors are in the impression that this is just going to continue. There's no stopping this. Just be invested, fully invested, and you're going to be rewarded. And over the last 2 or 3 years, yes, but there's a turning point that this can't continue, and that's my concern. I don't know if it's in a month or two or this year. Have no clue. All I know is I need to protect my clients' money because when the trend down starts, we don't know if it's going to continue. So if we look at this, again, started one a little bit, started one up again, one down, one up, one down, one up. You don't know when this trend is going to continue down. That's the unknown. That's the risk. So anyway, thank you for watching. Oh, before I forget, want to wish all moms happy Mother's Day. May you have a blessed, blessed day with family, friends, grandkids. Great meal. We have a lot for we as men and kids, and thankful for our moms. They do so much for us. We wouldn't be here without them. So thank you, moms, for being there for us. And again, happy, blessed Mother's Day, tomorrow's celebration. Thank you for watching. Have a great weekend, Sunday. Stay tuned, and we'll see you in a week. Bye now.